Hey everyone, and welcome to The Deep Dive, where we take a deep dive into all those fascinating financial reports and news stories.
Uncovering those golden nuggets of insight that you can actually use.
And today, we are strapping on our helmets and diving headfirst into the world of Tesla. We've got this fresh Morningstar analysis.
Oh, yeah.
Just buzzing with insights into their recent earnings. They've got some bold strategies.
Very bold.
And of course, what everyone's saying, all the bulls and the bears.
Yeah.
About the future of this electric giant.
Yeah, this is going to be more than just like your average earnings report. We're really going to try to dig into whether Tesla can actually hold on to its crown.
As the EV king.
With all this competition heating up.
Absolutely. But before we get into all of that, we have to address the elephant in the room. Or maybe I should say
The Cybertruck.
the Cybertruck in the room.
Right.
Elon Musk's compensation. Remember that massive package back in 2018? The one that got everyone talking? Well, a Delaware judge just upheld a ruling to void it.
Yeah, that was
Basically.
that's a pretty big development. And even though the shareholders actually voted to reinstate that package earlier this year, the judge's decision stands. But here's the thing. Morningstar doesn't think this is going to impact Tesla's operations at all, or their fair value estimate of $210 a share.
Okay. So the judge is saying no to this huge compensation deal.
Yeah.
But Morningstar is basically saying, don't worry, it's not a big deal. So help me understand that. What's their logic?
So they're pointing out that Tesla has actually moved their incorporation to Texas. And because of that, the board could theoretically use that shareholder vote as a reason to create a completely new compensation plan for Musk, maybe even bigger.
Oh, wow.
So it's a little bit of a loophole.
Yeah, legal workaround. I mean, that's a bold move.
Right.
But wouldn't that raise concerns about what's called that key person risk? And for those who maybe aren't familiar with that term, it basically means that a company is overly reliant on one single person, in this case, Elon Musk. And if something were to happen, like let's just say you decided to leave Tesla,
Right.
it could seriously impact the company's future.
Yeah, that's definitely a valid point. And it seems like the market kind of reacted to that. Tesla stock did dip a little bit after the news, but Morningstar seems to think that Musk is committed to Tesla for the long haul, at least for now.
Okay, so we've got this compensation drama kind of brewing in the background. But let's park that for a minute and let's steer this conversation into the heart of Tesla's operations, their business strategy. And Morningstar paints a pretty ambitious picture here.
Oh, yeah.
So what's the big picture vision?
So Tesla's not just aiming to be a car company. They want to completely revolutionize both transportation and energy, this two-pronged approach. That's at the core of everything they're doing.
Wow, shooting for the moon. I like it. But let's break that down a little bit further. How are they actually trying to make this vision a reality?
So they're investing a ton in R&D, constantly pushing the boundaries of EV technology. They're expanding their global production capacity, new factories popping up all over the place, and then they're also building out that supercharger network. So they're trying to make long-distance travel a reality for EV owners. It's all about creating an entire ecosystem, not just selling cars.
Okay, so they're going all in on EVs. But what's the word on the street? What are the bulls and the bears saying about Tesla's chances of actually pulling this off?
As you can imagine. Opinions are pretty divided. The bulls are super optimistic right now. They see Tesla as a true disruptor, a company poised to achieve even higher profit margins as they refine their production process and make breakthroughs with self-driving software. They even think that Tesla could end up licensing that software to other car companies.
Oh, wow. That would be a total game changer. But I'm sure the bears have a different perspective.
They do. They're a little bit more cautious. They're really emphasizing all that increasing competition in the EV market. You know, the traditional car manufacturers are catching up, and they're pointing to Tesla's dependence on China for some of its battery production as a potential weakness.
Yeah, that makes sense. So you got optimists on one side, skeptics on the other. Where does Morningstar actually stand in all of this? Do they think Tesla has what it takes to maintain their lead?
That's where this concept of the economic moat comes in. Now, you might be familiar with this term, but just in case you aren't, think of it as a company's ability to kind of maintain a competitive advantage over a long period of time. And Morningstar gives Tesla a narrow moat rating.
Okay, that sounds encouraging.
Yeah.
But what does narrow moat actually mean? Are they saying that Tesla is strong but not unbeatable?
Exactly. They acknowledge their strengths, but they're not quite ready to declare them invincible.
Okay, so what are the factors that are actually contributing to this narrow moat?
Right.
What are Tesla's core strengths? And what might be holding them back from having a wider moat?
So they highlight three key strengths: brand power, technological innovation, and cost advantages. So Tesla has built this Truly iconic brand. It's synonymous with luxury. Performance, cutting-edge tech. And they've also been really successful at reducing those production costs, which gives them a competitive edge, but the rapid pace of innovation in the EV market and the increasing competition are factors that they think might limit the width of their moat.
So a lot of potential, but also some valid concerns. Now, I think our listeners will be really curious to know how Morningstar translates all of this analysis into some actual investment implications. What's their fair value estimate for Tesla, and what are the key factors they're considering when it comes to potential profits?
Yeah, so let's talk numbers. Their fair value estimate is $210. And this is based on some pretty incredible growth projections. They're actually predicting that Tesla could be delivering nearly 5 million vehicles every single year by 2030.
Wow, 5 million. That's a huge jump from where they are now. But, we have to remember, Tesla isn't just about cars anymore. They've got that energy generation and storage business. That's gaining traction. Does Morningstar see that contributing to their profitability as well?
Absolutely. They're forecasting a whopping 33% average annual growth rate for that energy segment over the next decade. And a lot of this is driven by the demand for their Megapack, which is that utility-scale battery storage system.
For some serious growth potential there. It's like they're building an electric empire. But let's get real for a second. No investment is without risk. So what are some of the uncertainties that Morningstar flags when it comes to Tesla?
Well, they've given Tesla a very high uncertainty rating, and for good reason. They cite things like the inherent volatility of the automotive market, the intense competition, and you can never rule out economic downturns. They also point to Tesla's reliance on battery tech, which is constantly evolving, and the uncertainty surrounding the rollout of their self-driving software.
Right. Is it actually going to work as well as they're saying?
Yeah.
That remains to be seen. And plus, you can't forget about the Elon Musk factor. He's brilliant. But he can also be a little unpredictable, which kind of adds this whole other layer of complexity. So does Morningstar factor his influence into their risk assessment?
Oh, absolutely. They acknowledge that Musk's outsized influence and sometimes erratic behavior creates a unique risk for Tesla. I mean, he's definitely a visionary, but he's also known for making these bold pronouncements that don't always pan out, or at least not on the schedule he says they will. So investors definitely need to brace themselves for some potential volatility.
You're riding the Elon Musk roller coaster.
Exactly.
Never know which way it's going to go. But hey, that's part of what makes Tesla so fascinating.
It is.
Okay, so we've talked about the risks, the uncertainties. Let's flip the coin, focus on some of the positive things. What are some of the things that Morningstar sees that are going to drive Tesla's future profitability?
So one of the things they're most excited about is the potential of Tesla's autonomous driving software. If they can perfect this and launch a fully functional self-driving system, that's going to be massive.
Right.
It's going to be a huge revenue generator. Think about it. They could sell it to Tesla owners, but they could also potentially license it to other manufacturers as well.
That's disruption at its finest.
Yeah.
But even if the self-driving thing doesn't quite pan out, Tesla's still got a lot going for it. Yeah.
Definitely. They've got incredible brand recognition, leading-edge technology, super loyal customer base, and they're constantly expanding their production capacity, which should help them meet that growing demand. And let's not forget that energy storage business poised for explosive growth.
Okay, so we've got a pretty clear picture of Tesla's financial performance, the risks they're facing, the opportunities that lie ahead. But I'm sure our listeners are wondering, what does all of this mean for me? Should I buy Tesla stock, or is it too risky?
That's the million-dollar question. And ultimately, each investor has to answer that for themselves. But based on Morningstar's analysis, we can say that Tesla is a high-growth, high-risk company with a lot of potential upside. However, there are some significant uncertainties that could affect their future performance.
So it's a gamble. But some people might be willing to take that gamble, especially if they believe in Tesla's long-term vision. What are your thoughts?
I'm personally intrigued by Tesla's potential, but I'm also mindful of the risks involved. Definitely a company I would keep on my watch list.
Yeah.
But I would do a lot of research and carefully consider my risk tolerance before making any decisions.
Yeah, that's a smart approach. Always do your research before investing in any company, especially one as complex and dynamic as Tesla. But that's what makes the world of investing so exciting.
Right.
It's a continuous learning process.
Right.
Let's shift our focus a little bit to how Tesla is actually using its capital to fuel all this growth.
Yeah, so they're putting a lot of resources into expanding their production capacity. And they're also investing heavily in research and development to stay ahead of the curve.
So they're putting their money where their mouth is when it comes to growth. But what about their shareholders? Are there any plans to reward them, maybe through dividends or something?
So right now, Tesla is all about reinvestment. They're not issuing any dividends. Every dollar of profit is going back into the company to fuel that expansion. So it's very much a classic growth phase strategy. They have, however, hinted at the possibility of share buybacks once the production of their more affordable vehicles is at full capacity.
Interesting. So it's all about delayed gratification for investors right now.
Yeah.
Speaking of investors, we can't talk about Tesla without talking about Elon Musk. He's such a central figure in the company's story. So how does Morningstar assess his role and that whole compensation situation?
They definitely recognize that Musk is a driving force. Behind Tesla's success, his leadership, his vision, his ability to attract talent, generate excitement, these are all huge factors. They also highlight his unique compensation structure, which is really tied to the company's performance, including those ambitious market cap targets. So even though that 2018 package was voided, they seem to think he'll still end up very well compensated.
Yeah, sounds like he's playing the long game, betting big on Tesla's success. But what about the future? Is there anyone being groomed to potentially take over one day?
That's where Tom Zhu comes into the picture. He's the VP overseeing U.S. operations, and Morningstar notes that he's recently been given a much broader role. He's now in charge of sales in both the U.S. and Europe.
So essentially he's second in command.
Exactly. And some people are speculating that this might be a sign of succession planning in action.
Wow. Maybe Musk is starting to think about stepping back, at least partially. We'll have to wait and see how that plays out. But for now, let's take a moment to reflect on what we've learned so far. And then we'll dive a little deeper into Tesla's financials when we come back. All right, we are back. And before the break, we were just talking about all those ambitious plans and some of the uncertainties that Tesla's facing. But now let's shift gears a little bit and really delve into their financial performance. So what can you tell us about their recent earnings and how they've been doing overall?
Well, in the third quarter, their earnings actually beat what analysts were expecting, which is always a good sign. It seems like those profit margins, which kind of took a hit earlier this year, they're starting to bounce back.
Okay, so they're on track for profitability, despite a few bumps in the road there. What's fueling that rebound? What's Morningstar pointing to?
So a couple things are standing out. First, there's been a big increase in deliveries. They shipped a ton of cars in the third quarter, and obviously that translates to higher revenue. And then their focus on cost reduction is really starting to pay off. They've been streamlining their manufacturing processes, making each vehicle more efficiently. And then you can't forget about the growing revenue stream from that autonomous driving software. That boasts a very high profit margin.
So it sounds like a combination of strategic moves is paying off. But let's zoom out a little bit. Look at the bigger picture here. What kind of financial projections is Morningstar making for Tesla's future?
That's where those impressive projections that we mentioned earlier come in. They're saying that Tesla could be delivering close to 5 million vehicles every year by 2030. So they're definitely anticipating strong demand for their products.
5 million, that's incredible. But again, Tesla is not a one-trick pony.
Right.
They have that energy generation and storage business. What's the outlook there?
Morningstar's super bullish on that front, too. They're predicting an average annual growth rate of 33% for that business over the next decade. And that's largely driven by the demand for their Megapack, that utility-scale battery storage system.
Oh, so they're potentially crushing it in the car market and poised to make some serious waves in the energy storage market. But let's be realistic. Is there anything that could potentially derail Tesla's success? What are some things that investors should be aware of?
Yeah, so one thing to remember is that the automotive market is cyclical, which means that economic downturns can definitely impact demand.
Makes sense.
And then the competition is just getting more intense all the time, with traditional automakers investing heavily in their own EVs. So there's always a risk that Tesla could lose some of its market share.
Yeah. And what about their reliance on China? We talked about that a little earlier.
Yeah.
As a potential concern.
Right. That's definitely something to keep an eye on, especially since some of their more affordable vehicles rely on batteries that are made in China. That could be problematic if trade tensions escalate or if there are disruptions to the supply chain.
Right. And of course, the Elon Musk factor. Visionary, but unpredictable. How does Morningstar factor his influence into their analysis?
So they acknowledge that Musk's influence and behavior creates a unique risk for Tesla. He's definitely known for making some promises that don't always materialize, or at least not as quickly as he says they will. So investors need to be prepared for some volatility.
All right, so we've talked about some of the risks, some of the uncertainties. Let's flip the script and talk about the positive things. What are some of the key drivers that Morningstar sees that are fueling Tesla's future profitability?
So they're especially optimistic about that autonomous driving software. If they can really develop a fully functional self-driving system, that's going to be a game changer. It could be a huge revenue generator, not just for Tesla owners, but they could license it out to other manufacturers.
Wow. Now that's disruptive innovation. But even if the self-driving thing doesn't quite work out, Tesla still has a lot going for it, right?
For sure. They've got that brand recognition, cutting-edge technology, a super loyal fan base, and they're constantly expanding production to meet that growing demand. And again, don't forget about that energy storage business, which is poised for some big growth.
Okay, so we've really explored Tesla's financials, the risks they're facing, the opportunities that are out there. But I'm sure people are wondering, what's the bottom line here? Should they invest in Tesla?
That's a tough question, and it's one that each investor really needs to answer for themselves based on their own situation. But what we can say is that based on this Morningstar report, Tesla is a high-growth, high-risk company with a lot of potential. But there are also some uncertainties that could impact their future performance.
Yeah, and it's interesting. Morningstar gave them that narrow moat rating.
Yeah.
Which means they see their strengths,
Right.
but they're not quite convinced that those strengths are totally unbeatable. So what's holding them back from giving Tesla a wider moat?
Well, the competition is really heating up, and some of the more traditional automakers are catching up fast.
So it's a bit of a gamble. But for those who really believe in Tesla's vision and are comfortable with that higher level of risk, it might be a gamble worth taking.
Yeah, I mean, ultimately, the decision to invest in Tesla comes down to your own circumstances and how you see the company's potential about it.
Well said. I think this deep dive has really given our listeners some great insights into Tesla's current position and their future prospects. But before we wrap things up, I want to go back to Tesla's capital allocation strategy for a second. We touched on it earlier, but I think it's worth exploring a little bit further.
Yeah, definitely. It's a fascinating part of their whole approach. They're known for those aggressive investments in growth. They've always prioritized putting profits back into the company to expand and develop new technologies, and that's been a key driver of their expansion. But it also comes with some risks. Well, one risk is that they could end up overspending or not using those resources as efficiently as they could. And if they invest in projects that don't really pan out, that could really impact their profitability and long-term sustainability.
That's a good point. So it's like this balancing act
Yeah.
between going for that growth and making sure those investments are smart.
Right. And another risk is that it leaves less room for shareholder payouts, like dividends or buybacks, which can be a turnoff for investors who are looking for more immediate returns.
Okay, so it's a trade-off between investing for future growth and rewarding shareholders in the present. But didn't they say something about potentially doing share buybacks in the future?
They did. They mentioned that they might consider doing that once the production of those more affordable models is at full capacity.
Interesting, something to keep an eye on. So it sounds like Tesla's strategy is kind of a mix of bold investments, focus on innovation, and a willingness to wait for those long-term results. It's a high-risk, high-reward approach that's helped them grow so quickly, but it also requires careful management to make sure they're successful over the long term.
Yeah, I think that sums it up pretty well. Their strategy is definitely a key part of their story, and it's something that investors should think about carefully when they're evaluating the company.
I agree. All right, let's take a quick pause to gather our thoughts, and when we come back, we'll wrap up this Tesla deep dive with some final takeaways and some food for thought. All right, and we are back for the final leg of our Tesla deep dive. We've covered a lot of ground today, talk about earnings, bold strategies, those looming risks. So let's pull it all together and distill some key takeaways for our listeners.
You know, it's interesting how even with that legal setback with Musk's compensation, Morningstar is still pretty confident in Tesla. They're sticking with that $210 fair value estimate, which, as we've discussed, is based on some pretty aggressive growth predictions.
Right. We're talking like 5 million vehicles a year by 2030 and a 33% annual growth rate for that energy storage business.
Yeah, huge numbers, clearly aiming for a dominant position, not just in the EV market, but in energy as well.
As we've also talked about, it's not going to be easy.
Definitely not. They're in a really volatile market. The competition is getting fiercer, and the economy could always throw a curveball. Plus, that whole self-driving thing, still a big question mark.
Yeah, and then there's always the Elon Musk factor.
Of course.
Visionary leader, but unpredictable.
Adds a whole other layer of risk for sure.
So when you really step back and look at the big picture, Tesla's future is really tied to Elon Musk.
It is.
And he's been such a huge part of their success so far. But it does create uncertainty. So it makes you wonder, Can Tesla thrive in the long run if they're so dependent on one person?
That is the million-dollar question.
It is. And only time will tell. But let's bring it back to our listeners. After all of this, would you invest in Tesla?
It all comes down to your own risk tolerance and goals. Hopefully, this episode has given you the information you need to make a good decision. Tesla's an exciting company, huge potential, but there's also a lot of risk.
So do your research. Weigh the pros and cons. Figure out if it fits with your overall strategy. And remember, this is just a snapshot.
Right.
These markets are always changing.
Constantly.
So stay informed. Keep learning.
Knowledge is power, especially in the world of finance. And that's really what the deep dive is all about, giving you the insights you need so you can make smart decisions.
Exactly. We want you to walk away feeling informed, engaged, ready to do your own digging.
That's right.
So as we wrap up our Tesla deep dive, what's one key takeaway you'd like our listeners to remember?
For me, it's that Tesla is at a crossroads. They've done amazing things, but their future really depends on how they handle these challenges. Can they keep that technological advantage? Can they ramp up production to meet demand? And can they do all of this while managing those unique risks that come with Elon Musk?
Yeah, big questions. And the answers will shape Tesla's future. So we encourage all of you listening, think about these questions. Do your own research. Let us know what you think.
Yeah, we love hearing from you.
And if you enjoyed this episode, make sure to like, share, subscribe for more deep dives into the topics you care about. Until next time, stay curious, stay informed, and happy investing, everyone.